Hey everyone, and welcome back to Real Estate with Syntia. I'm Syntia Perry, Realtor with the agency Real Estate Services here in the Central Mississippi area, as well as Maison Fleur Realty Group in the Metro Atlanta area. And as you can see today, I have a special guest with me. Her name is Tiffany Crump, and we are going to be talking about getting pre-qualified for a mortgage loan. So Tiffany, go ahead and tell them about yourself and what we're going to talk about.
Thank you. Thank you. I appreciate it. Thank you for having me, Syntia. When you reached out to me about this collaboration and, giving your audience some information, I was so excited because this is definitely my realm and area of expertise. But again, as she mentioned, my name is Tiffany Crump. My background is in accounting and finance. My degree is in finance, and I'm also a certified credit consultant as in the last 3 to 4 years. And I'm also been a tax preparer for the past 13 years. So that's just a quick, just to give you an idea of what I do and my background. I come from the financial accounting background as far as corporate accounting and corporate finance. And I left my corporate job a year ago to start my own business. So here we are. I'm helping people get approved for loans, get approved for auto loans, mortgages, as well as building business credit as well. So
Absolutely.
just
So
a
she
crash
is
course.
highly qualified to tell us this information.
Yes, so I am able to give you a few tips. Now, as you know, just getting your credit together for pre-approval a mortgage loan is a whole process. We can literally talk about this all day, but I try to condense as much as possible just to give at least 7 steps to get you started. Because like I said, the whole process is basically either building your credit, restoring your credit, or repairing it, but it's getting you to the point of what's the minimum for the credit score minimum for a mortgage loan?
So the baseline we look for is at least 640. We can help with, 580. Sometimes people with 700 credit scores don't get approved just for different, circumstances, but we look for 640 FICO score.
Okay, so right, we want to get you approved, guaranteed approval, pre-approval. So that's why I'm laying out some steps of things that people need to take on their own before you even sit with a mortgage lender.
Absolutely.
So for my first step, which I know it may seem cliche, it's not it's not tangible, but it's mindset. Like you have to make up your mind that you're committing to this process. You want to buy a house or your first property. I always throw that out there because a lot of times, people don't even know why they want a home.
Mm-hmm.
People may say, right now it's like everybody's pushing a home ownership and building wealth and all that sounds good. And it's right. I'm not steering you away from that, but know your why up front, because I thought I wanted a home right away. And I definitely changed my mind later and said, no, I'd rather start off with a property. But right. I was knee deep halfway through the process already looking for a mortgage loan and looking at houses. But, it took someone to take me to the side like, well, you can take advantage of first time home buyer credits with your first property. So maybe consider that. So like I said, back to getting your mindset ready, because one is going to be a roller coaster. Things may pop up. You have to be willing to stick to a budget, be disciplined.
Yes.
Because it's not just as easy as, you don't want to be running up new things on your credit cards. You don't want to make major purchases. So this really is, you have to make up your mind that anything that interferes with you getting this loan or getting your house is out of the question.
Yeah, that's funny you said that. My broker told us the other day that she told one of her clients that I had to tell her, look, y'all gonna have to eat off hot dogs and oodles and noodles until don't run up your credit cards trying to eat crab legs and stuff when you're trying to get approved for a mortgage. So
definitely, it takes some sacrifice. You need to have a budget. You don't want to dip into your down payment. Even if you don't know the size and the amount of money you may need, you need to at least have an idea if you want to start from, I don't want to pay this, more than $1,600 a month for a mortgage. Like you have to have an idea, start somewhere in your mind, and then you let the professionals help you along the way and may make some adjustments. But your mindset has to be there already, because it can be frustrating. You can be in the middle of repairing your credit and then other stuff pop on.
Yeah.
And you may be halfway through the closing process and then another negative item pop up. So mindset is the first step I think once you prepare, you manifest it, you write it down, and you start shopping and just looking at houses, even if you can't afford them, just get your mind ready to get the feel of home ownership. Like, this is what I'm doing and this is why I'm doing it.
Right.
So clear cut, first step, get your mindset together. Second step, you got to pull your credit reports. I don't know why people wait till they get in front of a lender or wait till they get into the car dealership to let that person tell you what's on your credit.
That's the first thing I ask. Do you know your credit score? If not, go find out.
Exactly. Like, and it's not, we always focus on the score. The score is important, but really the score, it's the report that drives the score.
Absolutely.
So it's not just about if you have a 670, like as she even mentioned, it's people that get that's in the 700s and still get denied. And more than likely because they have a thin credit file. Right. So it's so many more components that go into your credit file on achieving an optimal score, but it's what's on your credit reports. It's what's on your actual file. The items that's reporting is what drives the score. So you have to pull your reports and scores. I highly suggest signing up for a credit monitoring service. Yes, it may cost no more than $30, but between Experian or Identity IQ, you want to monitor. I think that people should monitor their credit all the time.
Yeah, I do. Personally. I have Identity IQ.
Yeah, it's a necessary expense. Like, especially when it comes, we're in the middle of a scamdemic. We all know everybody's scamming. I mean, and just in general, to be protective of your credit, as soon as someone's trying to run your name, you get alerts. Yeah. So if you're in the process of trying to be pre-approved, you may have to pay down some debt, or just to make sure all of your creditors are reported accurately. I think you should be monitoring. So you want to pull your credit reports. That is all three from all three bureaus: TransUnion, Experian, Equifax. You can request them free from freeannualreport.com. And you also can request them from the credit monitoring service that you sign up with, whether that's Experian or Identity IQ or whatnot. And I know some credit cards also give you your credit score for free every month. So you pull your reports, you got your mindset together, you know you're ready to become a homeowner. Moving on to step number 3. Got to audit and prioritize. Now, this is a little tricky because I guess maybe the average person may not know what to look for, but it's not too hard reading your credit reports. I mean, it's pretty cut and dry. You can see what's negative, what's reporting, are your balances reporting correctly? Because even if all your open accounts, you want to make sure they're even showing your correct balance. Right. You want to make sure your student loans, your open loans, anything that you have reporting, you want to make sure it's reporting correctly, because if it's inaccurate or incorrect, that's grounds for dispute. Right. So prioritizing negative items. I mean, even it could be late payments. We always offer clients goodwill letters just to get late payments removed. You can been doing good for the past 7 months, but maybe 10 months ago you got a late payment. But you want to focus, I want to emphasize that you want to focus on anything 24 months and under. That is the most impactful things on your credit. Now, of course, things may stay on 7 years or longer, but the most impactful is the last 24 months.
That's something new I didn't know.
Oh, yeah, definitely start with 24 months. You could have had a late payment hit 5 years ago. It's not really, I mean, and then also, too, depending on your credit file, you got a lot of things reporting. Yeah. It can be more damaging than less, depending on what you have reporting. But focus on 24 months and under. Okay. Those are the most damaging. You focus on those things, and those are make the most points, from 50 to 100 point difference between late payments, collections, or whatnot. But 2 years and under, focus on those. I'm not saying forget about the collection 5 years ago. Just want to make it clear that you will be more productive in focusing on those items first, because those are the most impactful on your score. So we prioritize your negative items, the most damaging. The next step I always suggest is assigning a budget. You got to assign a debt budget.
Yes.
You have to have a plan, because even if you're not paying collections per se, you may need to just get your utilization down.
Yes,
You
debt to
may just
income
need
is a huge factor in getting the
right.
food.
That's an income ratio. Matter of fact, since you want to go into the debt income ratio, because what I'm going to talk about next is kind of going off of that. Right. What is the requirement? What are you guys looking at? And I can take take it over on what that makeup is.
Okay, so I know lenders, they look at it on the front and the back end. And on the front end, they look at your gross income and how much you're going to be paying for your mortgage, your taxes, your home insurance and all that stuff. And then on the back end, they take an account of all your debts, anything like car notes, alimony, student loans, child support payments, all that, your credit, basically the stuff that'll be on your credit file as well. So they look at it from the front to back end. And a good debt to income ratio, I would say a safe one would be 36%. Again, each case is different.
Okay.
If some get approved with 56, debt to income, but they have other factors. But I would say safely we would stick to around 36%.
Oh, okay. So that's even news to me. I thought 30% was the max, but that even gives you a little bit more leeway. I still shoot for 30%
because the lower the better, of course.
It's always best, and it's not just also about getting pre-approved. It's about getting the best rate. You want to maximize
absolutely
what you can get, to maximize the amount of money, or at least maximize and capitalize off the lowest interest rate. So it's not just about minimally making it to get pre-approved. It's also about getting more for your money, of course.
That's a good fact.
So more on the debt to income ratio, one of the biggest misconceptions, because people think, student loans are going to blow them out the roof, right? They don't go by the total amount of loans. That is such a big misconception. It's not. I know we all got $80,000, $100,000 loans out there, and we just like, I was one of those. That's why knowledge is power. I was one of the people that thought, okay, I just know with my student loans, there's no way they're going to give me anything. They actually take into account the payments you are making on that loan. They factor that in along with all your other bill payments. So with your debt to income ratio, is basically what you have outstanding over what you bring in monthly. So of course it's about living beyond, they want to make sure, you're locking into a 15-year plus mortgage. They want to make sure you're responsible, and all they have is your credit reports and finances. This is basically your digital fingerprint. It's your financial fingerprint. They don't get to know your whole life and sit down and talk to you. All they see what's on paper, what's black and white. So that's why it's very important. And one of the largest components of your credit score is the on-time payments. Yeah. And that's why we even, everybody fall off. You may missed a couple payments. That's why we highly suggest, and we have goodwill letters that we tell our clients to send creditors, because sometimes they work with you. 9 times out of 10, it doesn't serve them any purpose to keep an old late payment on your report. So they more than likely, especially if you're currently being good with that creditor, they'll remove it. And a lot of times, indirectly in those dispute letters or in those request letters, we have our clients say, "Look, I'm trying to get approved for a home loan. Can you please forgive it?" And it has worked. Sometimes it don't, but sometimes
worth a try.
Right, definitely worth a try, because, like I said, at the end of the day, you want to get the best rate possible. You preparing yourself to be pre-approved. Moving right along to the next step. I already talked about. Did I talk about the debt budget yet? Or I did not. I think I was getting there.
Yeah.
Having a debt budget, a debt management strategy, we call it DMS, a debt reduction plan, because like you said, the debt to income ratio needs to look good. That is one of the main factors, and you want to drive that number down as much as possible. So if you get an income tax check, or you got a side hustle, forget 30%. I know 30% utilization is the going, but that actually should be the maximum. You should be shooting for a 10% utilization to get optimal credit score. When I
Right.
say optimal, meaning maximum credit, the highest credit score you can
That you
have
can achieve,
with
right?
what's reported.
Okay.
So yeah, keep thinking. Just don't spend. When you spend, pay it right off.
Yeah.
Automate. I always suggest this. I know it may be a little funky with people on having money just shooting out of their account, but you got to go based on your personality and what's best for you. But if the funds is there, if the funds is not a problem, meaning the income is coming in, you get in direct deposit, you have the money to cover the bills, automate. That way you know you're not missing a payment.
You're not
You
late,
know
you're
your
not getting
payment.
none of that stuff. Yeah.
Automate your payments, just the minimum on the credit cards, just the minimum, you know, on your maybe ComEd, electric or whatnot. Focusing on, have a debt budget. Another reason why you need to have a debt budget, because when it comes to collections, sometimes, most of the time, collection agencies will work with you. They may give you an offer to settle on the debt for less than half or 40%. I strongly suggest, I'm a big advocate for not paying collection agencies. Everybody, some people don't like it. Don't pay a debt that they can't approve, can't validate, I should say. If they can't prove you owe it, I'm not paying it. But also that goes into how much time do you have? You know, do you have time to dispute and go back and forth, or you just want to be one and done? That's another
because a
factor.
dispute can't even be on your credit report when you're applying for a mortgage.
Right. And going into that, that's a little workaround we have is it's called direct disputing. That's why you go to the source. We suggest disputing, start your disputing with the collection agency or with the original creditor, because the open disputes are usually when the credit bureaus have placed them, meaning you reached out to them, you want them to investigate because your credit furnisher or that original creditor or that collection agency is not following the laws. You know, when you get to the point of disputing with the credit bureaus, you failed with reaching the collection agency, or they're not complying, or the original creditor is not complying. So you don't go to the credit bureaus until you don't get any answers from them. So that's why we suggest starting with direct disputing. Because another trick with direct disputing, going straight to the source, say they agree to do a paper deletion. So that's why we strongly suggest, if you're going to put some money towards debt, if you're going to pay a debt, they have to delete it.
Yes.
Always keep in your mind, if it doesn't benefit my report, I'm not doing it. I don't care if I know I owe that T-Mobile bill, but can you prove it? You need to be able to prove that I owe it and provide the necessary documents.
Yeah.
And 9 times out of 10, when they bought the debt, they don't have none of that information. Why should I pay a collection agency? I didn't even pay T-Mobile. Why should I pay you guys? You remove it. Now, if it benefits me, I know I'm shopping for a home. I know it was mine. But if you delete it immediately and my score would immediately see the results, you may be willing to settle. And that is the only time I suggest that you settle. If your back is against the wall, you want to hurry up and get it done with, or, in the case of you shopping for a home loan, but they have to delete the debt. That would be the only way I would agree. But to each his own. And if they agree, you have to get it in writing. And a trick that I heard, I think, Syntia, you can back me up or let me know if you've heard this. When you say you send in a creditor has agreed to delete the debt, they haven't, but the credit reports haven't updated it yet. I've heard that you can definitely send that same letter to your mortgage lender, and underwriting can update your report.
Yeah, it's actually called a rapid rescore. So that's what they'll do. They'll do a rapid rescore and get the new credit report and all that stuff for you.
Okay, so just to confirm, I've heard that works, especially in instances where you're approaching the closing deadline. You need a rapid rescore. So, keeping your documentation. So that's why we, again, going back to direct disputing, because as she mentioned, you're not going to get approved if you have open disputes on your credit reports.
Yeah.
And that's why we also suggest giving yourself time. If you want to buy a house, I mean, at
Start
least
now.
3 to 6. Right. Start now. 3-6 months, because your issue may be, it may not even be bad credit or repairing. The issue may be you just need to build credit.
Yeah.
But creditors do not report more than once every 30 days. You just can't get around that.
Yeah.
That's the time frame. So even if you have positive behavior and positive payment history, they only report once a month.
Yeah.
And they need to see a pattern. So at minimum, you need to see months of responsibility.
I say a year. I say if you know you have some things to get done, start a year in advance. Yeah.
Okay. I done lost track of what number I'm on, but
we
what
giving them
number
some good
step.
info. So
But right, we getting through. I believe I'm on the last two, which I already the last one, which I already mentioned, disputing directly with the credit furnisher, or the person that's reporting it on the credit, and that could be the collection agency or the original creditor. But my last tip was really about even vetting your mortgage lenders.
Yes.
You
That's
need to ask questions.
Yes.
With anything you do, you always look at it like this. What you don't know, you giving more power to the person you paying, or the professional you're dealing with. And it's not to say don't trust them. It's just that I've seen so many times clients get into the end of the closing process, and the mortgage lender tell them, just pay this, pay that. And it's like, no. That's not your area. Now, some mortgage lenders actually they are versed in credit restoration or credit repair, but I'm not discrediting your lender or your real estate agent, but sometimes they will tell you to do things because they're just ready to move you along the process, or they're worried about the commission, and it's not the best thing. And that's also going back to, that's why you give yourself time, and that's why you pull your reports ahead of time. Don't leave it up to them to tell you what information or what's on there or what you should do. Because guess what happens when you pay that debt? It re-ages. It does not help your score.
Right.
It refreshes the debt as if you just got the debt. So if that debt was 3 years old sitting on your credit report, not to say it wasn't affecting it, but it had less effect than now I paid it. All they did was update the balance.
Yeah. That's a good point. That's a good point too. Absolutely.
It went from 6,000 to 0, but it re-aged and it's sitting there. So again, no, up front, if it don't benefit my credit report, I'm not gonna comply.
Right. See, that's why I had you on here, because this is not my lane. I sell houses. You help people with finances and credit. So I know the basics.
That we got to work together. It goes together. We getting these people ready, because I mean, the market is good right now. Like, this is if your ears out to the streets, everyone is telling you, like, right now, the wealth transfer is happening, baby.
Yes.
So you ready to, it's time. You want to own that home. You want to get your first property. You need to do it now. You need to start educating yourself. And regardless if you're not shopping for anything, you need to have your credit and finances together.
For all types of things.
I think this is a crash course. Of course, I can go into more detail about how to dispute, how to even audit your credit reports, or going through your financials and getting more specific to detail. But at the very least, if you follow these 7 steps, you on your way to be pre-approved. Because that's the goal.
Totally agree.
Prepare to be pre-approved. Your pre-approval is your negotiation tool. Yes. It's your match. It's your golden ticket. It is your stamp. It is the stamp and letting know the real estate agents that you're not wasting my time.
Yeah, I was gonna say, because that's what we asked for. Now, I'm not gonna not work with you. I'm just gonna put you on a plan to get you where we need to be. But I'm gonna ask for that pre-approval letter before I take you out shopping for a home, because
they not showing you nothing. You will be on Zillow. You can do some Zillow shopping, or be online, but they're not taking you to see no houses without knowing that you at least qualify. And just to even add on to that, the difference between pre-qualify and pre-approved.
Yes.
Pre-approved means you actually got a pre-approval. You have an official offer. It is solid. They ran some type of you provided some type of
they had your financials. Yeah.
And to
They
let
had your
them know
financials.
what's the possibility of estimated amount of money that you can get pre-approved for. You also use this as a negotiation tool because, hey, you shopping it around. Hey, can you beat this rate? Can you give me more money?
Yeah.
Different lenders have different caps and different, different rules. So that is not set in stone just because you got an offer, just one offer.
Yeah. And I
So,
wanted to about that, about the shopping around part, because I know a lot of people think a lot of times when they shopping for a mortgage, once they get pulled, it's a hard hit on their credit score. But I heard that, well, not heard, but I had lenders tell me that they have a period of time to shop for a mortgage where it doesn't hurt them with each
inquiry.
pre-qualification they get.
Yeah, within 14 days.
Okay.
When they see that's with anything. If you're car shopping, they will lump together all those inquiries into one, just as count them as one, because they know you're shopping around. You're not continuously taking hard hits. But that's the point. That's also why it helps to have a pre-approval. If they can't beat it, they don't need to run.
Yeah.
You already got your credit ran. You already have an amount. You have an offer.
Right.
So the only reason why you would be running it again is to beat the offer. It's to give you more of an advantage. But pre-qualified just means at some point it's like you're in a automated lottery or computer system. At some point they ran your credit and it's like, oh, it's an estimate, it's a possibility you can get approved for up to this amount if you apply. But the problem is when they pre-qualified you don't know at what point in time that was. You don't know what credit report they use, because if sometimes things are report to Equifax but not TransUnion,
right?
Or one credit bureau versus the other. I mean, my TransUnion don't have half the debt my Experian is on it. Yeah. So that those factors are taken into account when they run you, and it's a soft pull and it's just a generalization. So again, that's the difference between pre-qualified and pre-approved. But you want to shoot for pre-approved. Or pre-qualified it hypes you up. I'm not saying you can't go off of it. It just lets you know, oh well, generally I'm in this realm. I'm in this. Okay, I may have fair credit. I may be between 590 and 640, so I may qualify for a certain amount.
And it helps you know where you need to start, where you can go from there. So yeah,
absolutely.
Okay, this was definitely some good information. Did you have any more tips to give the people?
I actually do. I gave you the do's, but I definitely have some don'ts, because y'all be out there hard-headed when you're trying to shop.
Oh yeah, I like this segment because honey,
yes, I definitely have some don'ts, and you can jump in and correct me if I say anything too far or confirm. But don'ts is don't change jobs or become self-employed right in between of the process.
Yes, don't.
And you have to look at it from your lender's standpoint, from the business standpoint, from you're trying to get a loan. So they need to see responsibility and stability, consistency.
Yes. Now I will say one point on that is if you've been in the same industry. So say you're a nurse and you maybe move to another hospital and you got higher pay, that'll be something that they'll still use. But like you said, don't switch from having a W-2 job to being a 1099 self-employed,
Right. Even if you may be making more money, but you need to hold on to them W-2s. I mean, that's just the way
because the financials are different. You have to show 2 years of W-2s to get, qualified with one type of income, and then you need to show something else for others. So, yeah, that's definitely a great point.
So we're not changing jobs, going self-employed. Do not spend your down payment. I mean, that should kind of be self-explanatory, but don't
even if you think you're getting down payment assistance, don't spend your down payment. Wait until after closing and do you.
Right on. Don't use your credit cards, or don't overuse. I'm not saying it's kind of just best, the rule of thumb, just don't touch them.
Yeah.
But really try not to use your credit cards. Try not to increase the balances, I should say, because you can use it but then pay it right back down, and it's not reporting. Remember, you want optimal, you want to get maximum money at the best rates. So just a rule of thumb, just try not to really spend on your credit cards. Don't pay anything late. I kind of mentioned this already. Automate as much as possible, but don't pay anything late.
Yeah.
Your payment history is critical. It's the largest component of your score, and it's showing stability and responsibility. Don't make any major purchases before the house. I don't care if you have a large sum of money and you want to get the bins before to pull up into the garage of the house. Don't do it.
Go finance a whole house of
it.
furniture, appliances. No, wait till you move in. Sleep on an air mattress your first night. You'll be fine.
Wait, I've seen it happen. I've seen a client crying because she was ready. She bought her whole living room set. She had ordered everything and did not close.
Yes.
And they just came up red flag, like, oh, what are you doing?
Yeah.
And it affected, she couldn't close.
Yeah, it happens. It happens.
So it's just a dumb problem to have. Don't do that. Don't apply for new credit. We have an alternative to that. If you do want to if you're trying to help your utilization and as well as, pay them down, just apply for credit limit increases.
Okay.
At least that's a soft pull. It's not hurting your credit. It's still serving the purpose of giving you more credit availability, but you're not having any new inquiries. Right. Inquiries do not move off of your credit report before 2 years. You're already running hard hits by trying to get approved. So don't apply for new credit. Don't have unnecessary new inquiries unless you need it to build your credit. Then you have no choice. Right. So if your problem is, well, I don't have any credit, I have nothing reporting, well, then you don't have a choice. You got to get some positive payment history. You want to get a couple of credit because your issue is you're trying to build credit. Right. And also in that instance, you're giving yourself more time then. Like you said, so say like more closer to a year. Don't change bank accounts.
No, we need those consistent statements.
Consistent. All of this is pretty much aligned. It's self-explanatory, but it's all aligned with each other of showing basically don't do anything out of the ordinary. Yeah. Don't break, don't switch your routine, don't switch your habits. Anything with your financials, it needs to be consistent. Yeah. So don't change it up. Even if you got a lump sum of money, even if you inherited, you will have to provide that documentation of where it came from. Yeah. But just know that everything needs to have an explanation for it. Yeah. That's very true. General.
I'm glad you said that too.
Rule of thumb. But that's red flags. Why you switching bank accounts? What's wrong? What you do? So, stick to that. Don't co-sign, don't lease for nobody else. And I already said it. Don't make significant purchases after closing. Right. So consistent. Those are just some really general don'ts. They all coincide with each other. Oh, I also when it comes to large deposits, I heard it's a red flag even with large deposits. And for of course, somebody asked, well, what's the amount? What is your threshold? The threshold is no more than 1% of the sale price.
Oh, okay. Okay. Because I knew that, but I didn't know the threshold. Okay.
Yeah. 1%, nothing more than 1% of the sale price will be,
something that they will have to,
right. If you don't have
documentation
But anything over 1%, you got to have some proof. Explanations and documentation and proof. So they get all in your business. But the point is, I promise you, if you follow those basic steps, you prepare ahead of time, it's going to streamline your process when you sit down with a lender. Yeah. You're going to make your relationship with your realtor is going to be that much better.
Impeccable.
You're exactly. Look, she knows she already, y'all be stressing y'all realtors out. I'm telling you. So I totally understand. That's why we said give yourself time, prepare your mindset. These are very simple steps. You may need help with the credit part. That's what my company come in and help TMC Consultants. I suggest, I always tell people to try it themselves first, because I'm all in the business of saving you money, even though I like to make money.
Right.
But I feel like it's a skill. Being on top of your finances and credit is a skill. It's a life skill. You should be in the habit of doing anywhere, because it's not going to stop here. I hope that anybody that's searching for it, that it is not your first home, it's not your last.
Yeah, you get investment properties and everything else. Yeah.
And this is the basics to cleaning up your credit in general for anything.
I
But
agree.
of course, this segment, we want to get pre-approved. We trying to walk around with the golden ticket.
Yes.
And it's like, hey,
get that clear to close.
Do better.
Absolutely. Okay, well, like I said, that was some great information. I learned some stuff. I'm sure everybody out there learned some stuff. Tiffany, I want to thank you for coming on the show and giving us this good info. We'll probably have to do this again. And like she said, you know, if you all need any coaching tips, you know, credit repair, go ahead and hit her up. Give everybody your social media information.
All right, yes. Social media handles is Finance Central _TMT. Finance Central _TMT.
Okay, and I'm gonna include that in the description as well, so that you all can contact Tiffany after this video is over.
Yes, and get on my email list. We actually are going to do a challenge. It's basically, we're doing a challenge. We're trying to get everybody approved for their homes for 2021. And I deliver everything that I spoke about today, plus more tips directly to your inbox. So definitely, hit us up and get on our email list and get all of this.
And I'll get the link to your email list for them to join too, and put that in the description as well. Because even my company, we're trying to get 75 people in homes before the end of this year. So that's something that they can take advantage of right now. And we're having a home buyer mixer next Wednesday, the 21st at 4th Avenue, if you are in Central Mississippi. I'll also leave that information in the description as well. And again, thank you, Tiffany.
Thank you so much for having me.
Of course. And everybody, I'm glad you all are watching, and stay tuned for next week's video. Talk to you soon. Bye.
Bye-bye.